We've got some breaking news right now on Tesla. CNBC.com technology and banking reporter Alex Sherman joining us now on the phone. Alex, welcome to Fast Money. What do you got, buddy?
Hey, Brian. So some breaking news here, incremental but important. The Tesla board, I'm told, is going to meet with financial advisors next week. And they are likely to say to Elon Musk that he should recuse himself from the board as the board reviews a potential take private. I'm also told what's likely to happen is the board will set up an independent special committee, maybe of a few of the board members, a smaller group, to review a proposal. I don't have any particular detail about what this proposal may look like, the structure of it, or, again, whether or not there's actually committed financing, which is the big question here. One of the people told me that there at least was a conversation between Elon Musk and the Saudi Sovereign Wealth Fund about a take private. But, again, I have no information about whether or not that conversation went anywhere or if there is, in fact, any Saudi money as part of a theoretical take private. But at least what we do know is that the board is taking this seriously. And so, what we shouldn't expect is some sort of statement tomorrow from Tesla saying this was a manic episode from Elon Musk, he wasn't serious, blah, blah, blah. They are moving forward as if it's a very real take-private offer.
And Alex, you're reporting, by the way, and thank you for breaking this story for us here on CNBC. Your reporting is moving the stock. Tesla was down. It is now higher. And I want to be clear on what you are saying. According to your sources, are they asking Elon Musk to recuse himself from the board generally, or recuse himself from the board in this process of ostensibly exploring a take-private situation? One is more permanent, one is temporary based on a situation.
The latter. The latter, I'm told. You can look back, in fact, to what happened with Michael Dell when Michael Dell took Dell private. A similar thing happened. So, again, first of all, none of this is for sure, but I'm told this is what's likely to be recommended next week. Another piece of information I can give you, similar to when Michael Dell took Dell private, I'm told that what the board will likely recommend is for Elon Musk to get his own advisors. So he sort of operates as a separate entity here. This is what happened with Michael Dell when he took Dell private. So that there's almost three entities here. There's the board in full, and Elon is the chairman of the board. Then there would be Elon as sort of a separate entity pursuing this management buyout. And then there would be this smaller independent committee, which would almost be a third entity here, which would then review the transaction, would be tasked with reviewing the details and the structure of the deals.
Alex Sherman, CNBC.com, breaking that news that is moving the stock. Alex, thank you very much for bringing that to us as well. Guys, you heard the news there. So according to Alex's reporting, excellent reporting there, the board may be asking Elon Musk to recuse himself from it. By the way, not surprising in some ways because the tax implications to Musk, like Michael Dell, would be so great. But here's the thing, Dan, Nathan, you had talked about going private. Here's a stock where our reporter just said they're asking Musk to step away from this process. The stock soars from its lows after hours. What does that tell you about how the market feels about Musk in this situation?
Well, I suspect it's what the shorts think. It's not really about new longs coming into it and trying to play this sort of thing. I mean, Karen, you're the risk arb here. It's a difficult trade, especially in a name like this. So I really do think it's probably the shorts.
I think that, first of all, that the board is just sort of getting around to this now. Hiring an independent banker is kind of ridiculous.
Or recommending it.
Or recommending it. They have to do it. He must recuse himself. That's the only proper thing for him to do. The idea that he actually would be recusing himself, it gives a little bit of credence to he really believes or he really is acting like he's going down this path. That may be. But we really need more detail than that. It's astounding. This is a real huge company that they're acting this way. It's ridiculous.
Look, anybody who's following this company doesn't think it's preposterous that there could be a private bid for it somewhere, despite the fact that it continues to burn cash and lose money. But that's not the point. The point is, what is the protocol that this guy followed? And is this announcement just a CYA by a board that now has to do something? That's not a reason to rally the stock 5% necessarily. That's why this is dangerous. If you bought stock at 385 on Tuesday afternoon and you found yourself at 350 today and you panicked because it could be at 310, you might have already lost a lot of money here. So, here's the point. I don't know that these announcements have been done correctly. Bottom line is, Dan talks about should this be a public company or not. I know your point was just to say this is what this guy has wanted all along. Look at his other public company. How'd Solar City do? He basically took that company out because he could. So, maybe he should stay private. But he went to the public markets. There's rules. There's protocol.
You clearly have a board that is back on its heels. They were likely caught off guard. We can't guarantee that, but it seems that way, caught off guard by the tweet, and they have to react. Let's bring in now Larry McDonald, who's been listening at all of this stuff and put out a great note about looking at Tesla bonds. Before we get to what the bonds may be telling us, let's talk about this equity move here, Larry, because you've got either one of two things happening. You've got a market that is happy that maybe Musk may be recusing himself, or you've got a market that may be happy that by this reporting by Alex Sherman, it is more likely a deal for a takeout is going to happen. Or I guess C, combination of the above.
Well, I think Karen nailed it. This is making it look like there's a deal. It's a kind of credibility cover-up. But at the end of the day, they would have to do something like this once he put that forth. But, the bottom line is, as I was listening to the table here, he's made a mockery of the SEC. And if you're worth 26 billion bucks, right, he's making a calculated bet that, okay, I might get $1 million fee, it might be $5 million bucks. You're worth 25 million bucks. You'll spend $1 million, $5 million bucks, maybe 500 grand to burn the shorts. And at the end of the day, Now the board has to put forth a happy face. They have to make it look like they have real financing. But the whole capital structure all week, bottom line, from the Solar City bonds to the high yield bonds, has really been telling you there's no financing there right now.
Credit markets, bonds, which are harder, obviously, to see for the average retail investor who's maybe watching Fast Money. You look at those bonds closely. The credit markets will like to tell you they're smarter than the equity markets. Who says that? Credit guys, by the way.
So equity guys.
But the credit markets to you, Larry, are sending a signal. The market does not believe there is a deal forthcoming.
Well, at least not a leverage deal, especially because the CDS actually is about the same level it was on Monday. The straight
credit default swaps.
The credit default swap, the straight debt, the 5.3% junk bonds are trading around the same area, and they're trading at a big discount to where the equity was in March. So the capital structure is saying there's no deal right now.
So just human nature. Well, easier to ask for forgiveness than permission. That sort of falls under this purview. But my question is, could he have the Chinese in his back pockets? Could he be building plants there and have sort of a wink and a nod that maybe there's funding there? Or is this Saudi investment fund, is that sort of a put now on Tesla stock, not unlike I said the other night, what the Federal Reserve is to the S&P 500?
Well, the fascinating thing about that point, and this tells us a lot about where we are in the market, when I talk to our clients in the Valley, I've got a few clients out in the Valley, close to the billionaire level, they think he has the cash. And they remind me, as a point I think Dan made, if Musk and the top 5 holders control, say, 30 billion of stock, then they don't need 80 billion.
Right, they need 50 billion, but they only have 11 billion of debt now. 50 billion debt on this company is an extraordinary amount of money.
They're about to go borrow more cash. They're burning through cash. This is the whole issue here.
Yeah, and every time in my career when a deal like this has been announced, the CDS blows out 100 bips, 200 bips, the credit default swaps, because it's a more leveraged company.
Larry, what about the fact that CDS just got listed in the last month? What does that say? Is there anything about the timing of that? It looked like there were some people scrambling for it in front of potentially a capital raise that would have been dilutive.
Yeah, it's. I'm shocked that it's taken that long. But the high yield market has actually started to mature a little bit in terms of CDS. Like a year ago, across the whole market was very illiquid. Mm-hmm. It's becoming more and more liquid, and this is a classic name where it should have the credit default swap trading against the bonds.
Larry McDonald, ACG Analytics, Bear Traps Report, CNBC contributor. Appreciate you coming on, Larry. Thank you very much. All right, guys, let's go around the horn. Obviously, this Tesla story changed very quickly on that CNBC.com report. The market says either, hey, we're glad that Musk is maybe being asked to recuse himself, as to your point, Karen, they should, because he's got his own tax interests here as well. That may separate him from the shareholders.
Aside from tax, this is a Delaware corp. They have, there's duties that the board needs to do. Aside from that, and I don't know what the tax implications, maybe he could just roll in, but aside from that, he has to negotiate against a party.
Larry said the M word, mockery. Tim Seymour, that he's making a mockery of the SEC. That's what Larry said. Do you think he's making a mockery of the deal process here?
again, it seems to me he's made a mockery of at least disclosure practices. And I'd just like to get back to the fundamentals in the stock, because all we've been doing is talking capital markets. There's a reason why some of this capital market activity is happening. This is a stock that's not making money. This is a stock that people on one side of the ledger think is so far ahead of the competition that they can do anything they want. I see GM and I see the German autos who have EV aspirations and execution that, to me, are not significantly farther behind. And if you think that Tesla has this data pool that allows them to compete in this universe going forward, different from these guys, I think you're wrong.
We just don't know the full value of the intellectual property portfolio, though.
I'm sorry?
The IP portfolio is sort of the great wild card here, is it not, for a potential acquirer?
I've believed that the stock is, and Tim makes a good point. I mean, if you look at the stock over the last year, it's basically been sideways, maybe just slightly higher. It's not like it's been some huge outperformer. I'll say again, the reaction of the stock based on that reporting doesn't surprise me. You talk about bankers going to bankers, sort of makes sense. And I do think this stock is going to continue to head higher. Does it make sense on a valuation basis? Absolutely not. But again, I'll say this. I can't believe he would have put that tweet out without having something in his back pocket.
We keep believing that because nobody has ever done it.
Well,
it doesn't mean it's not true.
No, absolutely.
Let me just go back to Uber again, because it's probably one of the most disruptive companies since Tesla, out there in Silicon Valley. I mean, their founder and biggest shareholder got run out by a board that was very defensive of him in a very short period of time. And he also got run out by the press. And so this guy has antagonized the investment community, specifically the shorts, and the press. And so, if the SEC is really on his tail here and there was something that didn't go wrong, and now he's recused, he's already one step removed from the whole process. So to me, you run the risk. And if Musk's gone from this company, then that's one of the biggest pillars, I think, of the bull case.
In a good way or bad way. At this point, guys, let's ask the honest question. Is Elon Musk a benefit to Tesla?
Yes, no doubt. I mean, I think if he were out, all of that cult stock, the levitation that the stock has had on the visionary, status of Elon Musk will deflate pretty quickly.
But he's launched the company. He's done the heavy lifting. I'm just playing devil's advocate.
Right.
He's an amazing businessman. He's done the hard work. Now, many would argue car companies are among the most difficult to run. You need an operations person.
If the answer to that question is yes, Brian, I think investors should be concerned, because if all your hype is tied up in this one guy and he is where all the critical value is, I think you're right, Karen. I'm not disagreeing with you, but that would be a major concern to me, and I think he is tied up in the